VAS versus A200. VAS is the Vanguard Australian Shares Index ETF. It tracks the ASX 300 for long-term capital growth with dividend income and franking credits. A200 is the Beta Shares Australia 200 ETF. It tracks an index of the 200 largest companies on the ASX. So which ETF made the most amount of money in the past? VAS had the best 1-year returns, A200 had the best 3-year returns and 5-year returns, and VAS had the best 10-year and 15-year returns. Now the industry standard says go with the ETF with the best 5-year return, but let's look a little deeper. Which ETF is older? VAS was made back in 2009 and A200 was made back in 2018. Which ETF is more popular? VAS has over 22 billion in assets under management and A200 has 8.5, not too bad. Which ETF has lower fees? A200 has the lower fees at 0.04%, but VAS has a 0.07%, which is still extremely affordable. Which ETF trades more often? On average, VAS trades over 400,000 shares each day. So it's going to be a little easier to get the price you want with the Vanguard product. Which ETF is less volatile? Both of these investments have a 1.0 beta, so they move just like the market. Which ETF has more holdings? So VAS currently holds 307 holdings, but these are market cap weighted. So really the bottom 100 stocks aren't really making up much of this ETF. So what are the top 5 holdings and weightings? VAS has a slightly higher percentage of CBA with 10.3%. It also has 7.9% in BHP, and A200 has more in NAP, WBC, and ANZ. These are extremely similar ETFs. Which ETF has more diversification? When we look at the sector allocations, VAS is a little more diversified, but again, these percentages are so similar that you really can't tell the difference between the two. The only real difference here is A200 has more in financials. It's putting more in the banks. Which ETF has the best value? VAS has the better PE ratio, price to sales, and price to cash flow. And A200 has a slightly better price to book, but again, these are so close. Which ETF has the best growth? According to the metrics, A200 has the best historical earnings, sales growth, and book value growth. Even though the cash flow growth was negative, VAS had a slightly better number at 0.43%. But in the end, which ETF has the best risk-adjusted return? A200 has a slightly better 3-year Sharpe ratio and a slightly better 5-year Sharpe ratio. It hasn't been around for 10 years, so VAS just wins this category by default. So if I absolutely had to pick one of these two ETFs, I would pick A200, the Beta Shares Australia 200 ETF. It has better historical performance, better management fees, better growth metrics, better Sharpe ratios, and you're going to have less overlap if you decide to pair this with a mid-cap or a small-cap ETF.